Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 6th day of November, 2014, and this is the daily report for gold and silver. We do have higher pricing in both gold and silver, lower in platinum and palladium. This on the heels of a runaway dollar. In fact, we currently have gold trading up about $3 on the day, 1143.74, and that is taking into account a stronger dollar, which is taking away about $8. So in terms of just buying coming into the market, it's actually about $10 worth of buying today. Once you take away dollar strength, we'll look at that chart in a second, you only have a net change of about $3 on the day. Silver, same scenario going on, in which although it is up about 14 cents when you account for the dollar strength right now, you've got much more of a substantial gain. But as we look at it, we're sitting mid $15 range, $15.44. Now, in terms of the low, $15.18, the high, $15.46, and in gold, we've had a low of $11.41.20 and a high of $11.49. More on silver in a little bit. So traders, this is what I'm talking about. Put up the dollar index. Now, it is softening just a little bit against the yen, but the euro and the other currencies, when we look at the dollar index, we are sitting right now at 88.18. You can see genuinely how this market has just been on fire. July through October, beginning of October, we get that 38% retracement, but that took it to just below 87. We certainly took that out, and you can see this dollar just steamrolling away. This being yesterday's trading activity on Wednesday, today's activity on Thursday. It is trading up near the highs on the day. And to top that off, we have the stock market also at a new record high. This, I believe, is a 4-year high in the dollar. But traders, I've just put up the Standard & Poor's. This, of course, is the E-mini ES. It's the E-mini. It's a fractional of the larger S&P 500 contract, 1/10 the value. And when we look at it, we're at 2026. And that just came off. We had the former record top. Now, we've been breaking the records on a daily basis, but I'm talking about this former record top, which was roughly at around 2010 before we saw the market dip. And what a resurgence, what a comeback. We are now trading in record territory in both the Dow Jones Industrial as well as the S&P 500. So what does that mean for gold and silver? So what I've done is I've gone ahead and I've pulled up our 2-day chart, and we've looked at this for quite some time, and really what my concern was overall was that when we looked at historical reference and we looked at how the market had this triple bottom back when the market traded up to a record top and then began to come down, I believe that this was a failed beginning of an impulse stage. So therefore, the way that I've got this particular model numbered, and realize I've got different models, but it shows us with a 5 count down. In essence, what we're looking at is wave 1, wave 2, a large wave 3, of course, a compression triangle for 4 concludes here, and now we're in wave 5. Now, here's the key. If wave 1 and wave 5 are equal, that would actually take this market down considerably, and the way that we'll first see it is it will break through this particular level at 1129. Now, we're sitting short from 1208. Yesterday, I believe we moved our stops down, lock in the profits. I think somewhere around 1171. I really picked a 3-day high. I looked at where the market has been over the last 3 days and just went right above the high. My recommendation, obviously, maintain our current short position. If we get some kind of a clip up, we can either look to weather the clip up and look to add more positions as we get to that bounce, because I think it's going to be a bounce genuinely. I don't think we're going to see a pivotal reversal right now, not unless we see a key differentiation, a key turnaround in both the dollar as well as the equities. And right now, with the European Union pumping in more quantitative easing and the Bank of Japan doing more quantitative easing. The dollar is really the only currency in town, so to speak, that people appear to believe will hold its value since we've ended our QE program. That has also brought a lot of foreign investment dollars into the U.S. equities market, so we see that rising. Many believe that stocks are properly valued here and are looking for a continuation of a rise in terms of some other technical pieces of information, and that is after a midterm election, I believe we have seen approximately a 17% gain in the Standard & Poor's between now and April, each time that's happened over the last couple of occurrences. So historically speaking, they're also looking for a run, and especially a run through the end of the year. I don't know if I'm going to go out towards April. Now, what would change that? Well, there's obviously parameters out there that would, but for right now, we are looking for this market to trend lower. Bounces, we expect them here or there. We haven't really gotten them. Today, we might have seen a bounce if it wasn't for that dollar, because realize that if it wasn't for incredible dollar strength, we would be seeing a $10, $11, $12 rise in the price of gold. And so we've really got gold being a salmon swimming upstream. And as far as silver goes, really, once we broke a couple of dramatic points, I mean, the main point we broke was just above 18. I believe it was actually around 1880. Market falls. We've got one little area here, and we can go back historically. But right now, our next real level of support, major support, the way I see it, doesn't really come in until about $15 per ounce. So I believe the continued pressure in gold, continued rise in the dollar should put continued pressure on silver, and I would look for lower pricing in silver. Maintain your current position in gold, your short position in gold. For those who are short silver, maintain your short silver. Gold, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We're continuing on that basic outlook this week. Once again, we'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.